concern rates in the Eurozone will not growth before following year at the 1, the Europe Centre Banking has signalled among testimony of a slowing in the 19 countries with the solitary exchange. The ECB as well opened a circle of crisp incentive, offer banks inexpensive loans to try to assist restore the economics. The sudden moves came as the banking done abrupt intermittent to its forecasts for both of increase and bloating the year. The ad shipped the euro downward by 0.6% versus the buck. Versus the LB, it omitted by 0.1%. The centre banking told rates would stay at this levels at low via the end of 2019, quite rather than its early guide of at low via the summer. Mario Draghi, CEO of the ECB, told economical information showed a significant temperance in increase. He told economical increase in the euro region was now anticipated to be 1.1% the year, as versus a early prediction of 1.7%. Bloating is anticipated to be 1.2%, downward of an over-prediction of 1.6%. We are to a time of extended weak and spreading ambiguity. The close-term increase worldview will be weaker rather than previous expected, Mr. Draghi told. The degree of the measures announced by the ECB emphasize its concerns above retarding increase in the Eurozone. Its judgment to shove behind on any plans to lift rates at any time quickly follows such moves of centre banks about the planet, consisting the US Fed backup and the Banking of England. Andrew Gower, Planet Facility Economy reporter. The Europe Centre Banking is hilly out the economical ordnance once again. A noted slowing in economical increase, affirmed present informal information as fair 0.2% in the definitive block of 2018, seems to include induced the banking to get several activity. Not the very big guns, at low at the phase. No cut in concern rates, they are so low already, how might not be lifelike in any case, and no recovery of qualitative weakening. But the banking is with two toolkit how to propose it is proper more than worried. One is named as striker guide, and sign of the potential way of concern rates in the next. They are now fate lower and the banking now says told they are potential to remain how way before the end of the year. Previous the time scale was via the summer. The guide is not a pledge, but it does speak lenders and borrowers thing on while rates largest potential to be modified. The ECB has as well announced plans for a new circle of which are named as AIM Length Term Refinancing Operative or TLTRO. If you are yet deliberate following read how, these are loans done to business banks designed to encourage more than credit to households and industry. They are as well designed to, as the ECB declaration puts it, provide the sleek transfer of cash politics. That tool propagating the impact of the low concern rates through the Eurozone economics. As a slowing in the Eurozone, Italy tilted in economic downturn at the end of recent year, Mr. Draghi as well sharpened to the effect of trading wars and some factors. The risks nearby the euro region increase worldview are yet inclined to the underside, on expense of the stability of uncertainties associated to geopolitical factors, the risk of protectionist and vulnerabilities in the growing markets, Mr. Draghi told. The new credit installation for the banking business segment will be named as AIM Much Longer Term Refinancing Operative. Andrew Kenningham, head Europe political economist at Equity Economy, told the guide on the following bet growth and the funding for banks was more than accommodative rather than the markets had expected. We question, yet, how the new measures will be quite to inverse the economical slowing, he told.